Good afternoon out there, XMC followers, XMC customers, and anybody that had interest in this video. This is Sean Stewart, President of XMC. I appreciate you taking the time to listen in to us today. And we're introducing a new series called Expert Moments. And really, in these times that we're all in, there's really some essential resources because I know people have many questions. And what we've done is really worked on leveraging our customer relationships to introduce you to some of our clients that really align to some of those essential businesses and really a table of experts to help possibly you navigate through some challenging times or any questions that you might have. And today I'm excited to introduce John Phillips. John is one of the founding partners of Red Door Wealth Management. John, welcome to the show.
Thanks, Sean. Happy to be here.
Yeah, if we just started from a general perspective, give us a little bit of background for you. And I know you're a Virginia grad, MUS grad, but what landed you at Red Door?
Yeah, I'm a native Memphian, and I did graduate from UVA and came straight back to Memphis and have been in the wealth management business since day one. And so 10 years ago now, myself and Fred Hyatt and some other partners started to kick off Red Door and launched it. And that was on the heels of the 2008 great financial crisis. And people thought we were crazy, but our response was it can only get better from here. So 10 years later, here we are again with another issue flare up, and we're working through it.
What is the most recent update, on the economy and the financial markets?
Obviously, coming into this year, no one expected, at least anyone that's admitting correctly, no one expected a virus and an oil shock at the same time. So it's kind of a double gut punch. And obviously, the solution that the U.S. and others have decided to take to fight the virus is to hunker down, flatten the curve, not let our hospital system get overwhelmed, which is absolutely the right thing to do. However, our economy is not intended to be a light switch that you flick on and off. It's a lot of cogs, a lot of wheels turning, and obviously it has led to unprecedented layoffs and furloughs. This morning we just got the initial unemployment claims numbers, and now we're up to 17 million claims in just 3 weeks, which is unbelievable, sets records across the board. Most of the stats that we have to go back to obviously go back to the Great Depression era, just because of the speed and depth that the economy has dropped so drastically. So the strains are deep and pretty unbelievable. The tools, though, to counteract that are twofold. One, you've got monetary policy, which the Fed, central bank here in the U.S. controls, along with other global central banks, and they have done, in my opinion, an unbelievable job responding to this situation. They basically pulled out the toolbox from the 2008 great financial crisis and quickly deployed them, basically allowing our financial plumbing system to not have any issues, which is great. It's a great backstop, and they've said, look, it's not going to be a financial issue. So that kind of turns to the fiscal side, which is the second tool. And so Washington has already taken some steps to provide $2 trillion in stimulus. That's a great first step. We think that's going to be the first of many. We think it could take us 10 trillion potentially to get to the other side of this, allow people who have lost their wages, their earnings, to hunker down, as we mentioned, have enough money to pay rent, buy foods, provide for their families. So Washington is doing a good job. They have more to do. They have to get it right, and they have to do it a lot quicker than they're used to doing. So I think we'll be okay on that front if they keep heading down the right tracks.
Normally, in times of challenge like this, we always have some point of history to point back to and be able to establish some trends. Many are referring to the influenza 1918 time period, but that took over 18 months to develop over time. And as you said, this is so rapid. One of the strangest phenomenons is during these challenging times, the market seemed to be responding, at least recently, very positive What are the main drivers for that?
That's a great question. I wish I could tell you what the driver is. You have to remember the stock market is a forward-looking machine. So right now it is pricing in what they expect to be happening in August through December. And obviously what we've seen the last 10 days, the rallies that we've had, the Dow itself has now bounced 30% from its lows just 2 weeks ago, which once again, just setting records. So what the market is telling you is that they expect things to be moving a lot more rapidly than obviously we're experiencing today. I'm having trouble getting my head wrapped around that, honestly, just because of where we are and the unemployment. And as I mentioned earlier, the economy is not intended to be a light switch, but there is a difference between the economy and the stock market. One of the things that we are going back and studying are bear markets, which are defined by 20% downturns in the stock market. And there are three types. There's cyclical, which just think of the Fed raising rates more than they should. Market slows down, peaks, and turns down. You get a bear market. The second one would be event driven, which is what we have now, obviously the virus and the oil shock. And then the third one would be a structural, which was more similar to the 2008 great financial crisis that we had. The difference between event driven and structural are massive. Event driven are much shorter in time period, typically 8 months. Recovery is a lot faster, 12 months. The top to bottom is it's much shallower, only down maybe 30%, versus structural. It is a long drawn out process. It can take years. Top to bottom, it can drop on average 60%, and it takes about 8 years to get out of it. And so while we are in an event driven issue right now, we want to make sure that we don't somehow slip into a structural issue, which, as I mentioned before, all the steps that the Fed and Washington are taking right now are steps in the right direction.
So if we brought that 10,000-foot view down to the ground level, we have lots of profiles out there of investors and groups, from business owners and executives down to employees contributing in a 401k, or frankly, an employee that may have been furloughed that's looking for areas of opportunity. What is your advice for what, if anything, those individuals should be doing?
Yeah, so there are two kind of strategies that we're deploying right now. One would be, it makes perfect sense to be rebalancing your portfolio right now. Stocks have dropped pretty precipitously quickly. Bonds should have held in there pretty well. And so your stock to bond allocation is probably off of where it should be. So it's a good time to rebalance, which you're selling your bonds, which have done well, buying the stocks that are at a discount. And what that will allow it to do is, if the market continues to rebound, you will make up that ground much more quickly. So that's number one. And obviously you can do that in 401k accounts. You can do that in taxable accounts. On the tax side, though, just be careful of tax consequences. The second strategy kind of leads into that. You can do some tax loss harvesting, which essentially you can sell some of your positions at a loss right now, transition to another similar holding for 31 days, get past the wash sale rules, and then if you want to, buy the securities back, realizing that loss, and then making sure that you don't miss out on a potential rebound. So those are a couple strategies that we're deploying. There were some retirement plan changes that individuals can take advantage of in regards to loans that have been increased, some reduce of costs on that side too. So there's some avenues, if you need money, that you can go get it.
Fantastic. And I know moving to someone that may be in a different situation that's been furloughed was part of the recent relief. There was some announcement where they're allowing access to 401ks. What are your thoughts on what someone should be considering before they take action in that situation?
Yeah, I mean, look, these are strange times, difficult times. 401k plan assets, they're your money. They're there for you. We would tell you to tap other assets, but have that sit in your back pocket if you need it. The beauty about particularly taking a 401k loan is long as you do go back to work, you can pay yourself back with interest. So that is not a bad avenue to use if it absolutely comes to it.
You know, one of the biggest dangers, I guess, are people opening their envelopes, looking at their balances. How do you coach people through that emotion of fear through times like this? Because statistically, it should prove itself that these are times that always rebalance and create opportunity.
Yeah, the fear is real. We get it. We understand it. We've been through major cycles like this. We've been through 2008. You know, coming into these cycles, or even once you're in the midst of it, the main thing to remember is you need to have a plan. You need to stay disciplined to that plan, and you need to stay patient. Where you'll do permanent harm to your personal finances is if you have the knee-jerk reaction of you can't take the pain anymore, and you sell, and you sold 2 weeks ago, as I mentioned, the Dow pops back 30%. You know, it's hard psychologically to then recommit and say, okay, well, I'll buy back in now. People have this anchoring issue where they basically say, well, I'm going to sit in cash until it gets back down. Well, you don't know it's going to go back down. I don't know if it's going to go back down to those levels. It could. You know, these are times where you just have to mentally have some fortitude, have someone to talk to, call your advisor. They should be able to walk you through what the plan is. They should be able to help you get through this and tell you what the strategy is going forward.
John, one final question here. I know no one has a crystal ball, but what do you see in the short term as we move forward here?
In the short term, everyone's obviously following the cases and the increase in the flattening of the curve. Obviously, we're seeing some good data out of New York, which is great. The markets are responding to that, as we talked about earlier. I think Washington is going to start talking about what their implementation plan is in the next few weeks and when they propose getting back to work. The bottom line is the longer or the shorter that this time period lasts where people are out of work, businesses cannot produce what they need to do, the more damage on the back end it's going to be. So I do not have a crystal ball. Hopefully we can continue to have good policy from the Fed, continue to have good policy from Washington out of fiscal stimulus, and we can keep everyone healthy and safe and get people back to work when the time is right, and have the economy slowly come back on, come live. It's not going to be, like I said, a flick of a light switch, and hopefully we'll get to the other side of this sooner rather than later. Fantastic.
Well, John, hey, I really appreciate your time, and again, we really appreciate Red Door Wealth Management being a customer of ours. Appreciative to be a customer of yours as well. For all those followers, I hope you enjoyed this. Stay tuned for some of our further segments on some key topics. And until next time, be safe. Thanks, everybody.